Bitcoin, a mysterious digital currency that you may have heard of but don't really understand. We're here to tell you everything you need to know about Bitcoin and blockchain in just under 6 minutes. In 2009, when Bitcoin first launched, it was practically worthless. A single unit of Bitcoin could only buy you a loaf of bread. However, since then, Bitcoin has skyrocketed to unbelievable heights. In 2017, one Bitcoin became worth over 20,000 loaves of bread. That's right, 20,000 loaves of bread. At its highest point, one Bitcoin was worth nearly $500 million Vietnamese dong, or around $20,000. So what exactly is Bitcoin? How does it work and why is it worth so much money? And finally, how can you make money with it? If you want to find out more, keep watching. To answer this question, we first need to take a look at something called blockchain, the magic ledge that makes Bitcoin possible. Without blockchain, Bitcoin wouldn't exist. So let's see how it works before diving into how Bitcoin works. When you use Bitcoin, every transaction is recorded on a public, transparent, and immutable blockchain. It's a bit like a digital ledger that keeps track of who has what, but there's a catch. Instead of keeping all the transaction records in one place, blockchain duplicates every single transaction across all the computers in the network. In other words, everyone has a copy of the same data. That means if one computer gets hacked, the information can't be altered. And if someone tries to change it, the other computers will spot the inconsistency and block the change. It's a foolproof system that ensures everyone's data stays safe and secure. But how does this technology work? Well, it starts with a block, which is basically a bunch of transactions that have been grouped together. Once a block is full, it's added to the blockchain, hence the name. Now, you might be wondering how these blocks are linked together. After all, if each computer has a copy of the data, how do you ensure that they're all in sync? The answer lies in something called a hash code, a unique string of characters that identifies a particular block. This hash code is then stored in the next block, creating a chain of blocks, hence the term blockchain. To create a new block, computers in the network must solve a complex mathematical problem. This process requires a lot of computing power. But once solved, the block is added to the blockchain and everyone gets a copy. Now that you understand how blockchain works, let's dive into how Bitcoin works. Bitcoin and blockchain are closely related, but they're not the same thing. Blockchain is the underlying technology that makes Bitcoin possible, while Bitcoin is a specific application of that technology. You can think of it like this. Blockchain is the hardware, the physical components that make up a computer, while Bitcoin is the software, the programs and applications that run on that hardware. With that in mind, let's take a closer look at Bitcoin. At its core, Bitcoin is a digital currency, a medium of exchange that allows people to buy goods and services without using traditional money. However, unlike traditional currencies, Bitcoin isn't controlled by any government or financial institution. Instead, it's decentralized, meaning that multiple computers maintain a record of all transactions. This makes it nearly impossible to counterfeit or manipulate the currency. But how do you mine Bitcoin? Well, mining is the process of verifying and adding new transactions to the blockchain. Miners use their computing power to solve complex algorithms, and those who successfully complete the process are rewarded with Bitcoin. It's a bit like a digital gold rush, except instead of panning for gold, miners are racing to solve complex math problems. And instead of gold, they're rewarded with Bitcoin. Another way to get your hands on some Bitcoin is by providing services related to the currency. For example, you could sell components or mining rigs to miners or offer maintenance services to keep their operations running smoothly. It's a growing industry with plenty of opportunities for entrepreneurs willing to take the risk. But wait, before you rush out to invest your life savings in Bitcoin, let's talk about some of the potential risks. While Bitcoin is a relatively safe investment, it's still important to be aware of the potential risks before taking the plunge. One of the biggest concerns with Bitcoin is its anonymity. Since transactions are recorded on a public blockchain, users can remain anonymous, which can make it difficult to track down scammers or criminals who may be using the currency for illicit activities. Another concern is the lack of control. Because Bitcoin isn't controlled by any government or financial institution, it can be difficult to get help if something goes wrong. For example, if you're scammed or your Bitcoin is stolen, it can be nearly impossible to get it back. Additionally, the price of Bitcoin is notoriously volatile, which can make it a risky investment. The value of Bitcoin has skyrocketed in recent years, but it's also plummeted just as quickly. It's not uncommon for the price to fluctuate by hundreds of dollars in a single day, which can make it difficult for investors to predict its future value. But perhaps the biggest concern with Bitcoin is its use in illegal activities. Because Bitcoin is anonymous and decentralized, it can be difficult to track down those who are using it for illicit purposes, such as money laundering or drug trafficking. This has led some governments to crack down on the currency, which could potentially lead to its decline. Despite these concerns, Bitcoin remains a popular investment and a fascinating technological development. Its decentralized nature and potential for use in illegal activities are both intriguing and controversial as the world becomes increasingly digital. It'll be interesting to see how Bitcoin and other cryptocurrencies evolve and whether they become a mainstream form of currency. If you're considering investing in Bitcoin, it's important to weigh the risks and benefits carefully. Do your research, invest responsibly, and be prepared for anything. While Bitcoin is the most popular cryptocurrency, there are many others to choose from. Ethereum, for example, is another digital currency that uses blockchain technology. Instead of being used for payments, Ethereum is often used to build decentralized applications and smart contracts. There are also several different types of coins to choose from, each with its own unique use case. Some coins are designed to be fast and cheap to use, while others prioritize security and privacy. Ultimately, the best coin for you will depend on your individual needs and preferences. You can make money with Bitcoin in 3 ways. First, you can invest in it just like you would in stocks or bonds. If you believe that the price of Bitcoin will go up, you can buy it now and sell it later for a profit. Second, you can mine it. As we mentioned earlier, mining is the process of verifying transactions and adding them to the blockchain. Miners are rewarded with Bitcoin for their efforts. And third, you can provide services related to Bitcoin. As the currency becomes more popular, there will be a growing need for services such as storage, security, and maintenance. By providing these services, you can earn Bitcoin without having to invest or mine it yourself. It's important to note that while Bitcoin is a potentially lucrative opportunity, it's also a risky one. The value of Bitcoin is highly volatile, and there's always the risk of scams or government intervention. Before getting involved, it's crucial to do your research, understand the risks, and invest responsibly. We hope that answers your questions about Bitcoin and blockchain. If you're interested in learning more about this exciting technology, stay tuned for our upcoming videos. We'll be covering topics such as how to buy and sell Bitcoin, the latest news and developments in the cryptocurrency world, and more. Don't forget to hit the subscribe button so you never miss an update. Thanks for watching.